Good morning, everyone. Welcome to the Vetiva breakfast meeting. Today, we'll be having the usual rundown of the equity and fixed income markets. We'll also be hearing from our media partners at Frontier Africa Reports. Also, yesterday, there was a flurry of earnings releases by our coverage companies, so we'll be taking a couple of updates from those companies in today's session as well. Before we begin, we'd like everyone to note that this meeting is being recorded and may be shared with third-party listeners. We'd also like everyone to note that the meeting is set to last for only 30 minutes, which will include Q&A. But if we're unable to get to your question because of time, we would like you to send your questions to us via email using research@vetiva.com, using the email address research@vetiva.com. So straight down to it, we'll be starting with the equity markets this morning. Good morning, Shion.
Yeah, good morning, Chima. Please confirm if you can hear me, please.
Yes, please.
All right. So good morning, everyone, and thank you for joining us. We start off with the performance of the BRVM Composite Index, which closed yesterday's session marginally lower by 4 basis points due to 9.49% drop in the share price of Bank of Africa, Burkina Faso. However, most other market parameters in that market were positive, such as improved volume and value traded, as well as positive market breadth, with 19 gainers and 13 losers. Year to date, the market remains positive at 2.77%. In Ghana, it was another day of positive close, as the index appreciated 4 basis points on the back of 1.67% gain in farm milk, among others, as there were no sellers in the session. Cowbank led the activity chart in a largely quiet session, as both volume and value traded declined by over 80% compared to the previous day's session. Year-to-date return, however, remains positive at 25.55%. We expect a positive market going into the last trading session of this week. So moving to Nigeria, the ASI reversed yesterday's loss to close up 175 basis points on the back of gains in names across sectors, led majorly by 784 basis point price appreciation in Dansem to reverse the loss it suffered in the previous session subsequent to the share price being marked down. That's been marked down for dividend. Then MTN with 394 basis point gain. J Berger, that's Julius Berger, with 10% gain, as well as Okomu and Fitin, all contributed to the positive close that we saw in the market yesterday. The banking subsector was a major casualty in this session, with losses in Access, FBN, GTB, and UBA, pushing the sector 135 bips lower. Speaking to activity, volume and value in the session were marginally higher, with 4% and 6% increase, respectively. We saw the reversal of the trend where the tier 1 banks majorly lead the activity chart. The names could only account for just 39% in the last session. So we saw a bit of investors moving away from the banking space. Market breadth also closed positive, with 23 gainers and 17 losers. And just like Chima mentioned earlier, as expected, we saw a rush of Q1 results released into the market, from Okomu to Total, First Bank, Union Bank, Dangote Sugar, Access, FCMB, WAPCO, as well as other smaller names in the insurance space, as well as consumer goods. Just to speak to some of the results, we saw BOA recorded increase in both top line and bottom line, with bottom line improving by over 13%. WAPCO in the same sector also released an impressive result with both bottom line and top line improving by 12% and 13% respectively. So to the banks, Access Q1 numbers were impressive with both top and bottom line growth. Bottom line grew about 30% for that tier one bank, which is quite significant for a bottom line growth of 30%. Then FCMB and FBN, however, recorded decline earnings. FBN specifically had the bottom line declined by 65%, which is quite a significant one. I'm sure maybe the banking analyst might be able to shed more light on that. Still on First Bank and some company news there. The CBN announced yesterday the sack of the board of both the holding company and the banking subsidiary due to what he says is insider abuse and breakdown of corporate governance, amongst others. The new board was also appointed by the Apex Bank. This is obviously negative for the company, and we expect negative reaction from investors in today's session. Airtel Africa also announced the resignation of his managing director, while the MD of the Nigerian entity has been approved to lead the telco from I think the fourth quarter of 2021. So going into today, we expect more Q1 earnings release, which will likely determine market direction, just like we saw in yesterday's session, as Julius Berger, Fitzin, and Okomu specifically were all lifted in the session. So we expect any decent results we'll see reaction from investors if there are decent results. That will be it for the equities market. Thank you.
Thank you very much, Shim. Just like Shim mentioned, WAPCO released their results yesterday, and Uneka, the industrial goods analyst, will be taking us through them.
Hi, Chima. Please confirm that you can hear me.
Yes, please.
Yeah, just like Chima said, WAPCO released their results yesterday, and it was very interesting results. We saw top line jump by about 12% year on year, which was largely in line with our expectations, to about 71.5 billion, just a little higher than our 70.1 billion naira expectations. And while top line and production cost estimates were largely on point, overall we saw WAPCO outperform our expectations significantly due to strong cost management, as well as significant tailwinds from a couple of other factors. But just quickly to give a background on the revenue jump, post-lockdown last year, we started to see really strong performances from across the cement sector. The key producers recorded sizable jumps in cement sales, largely due to strong demand from the public sector, as well as a mini renaissance in the real estate, in the residential and commercial real estate sectors. Going into 2021, we had expected this trend to continue, largely because the federal government had, placed an emphasis on driving transport infrastructure, ahead of the kickoff of the AFCFTA, which will see stronger integration between African nations. And we believe that this is one of the key things that was driving revenue, as well as some price increases across their portfolio. However, the main positives from their results came from their admin and operating expenses, as well as their net finance costs, where they were able to record strong cost minimizations. We believe that the cost minimizations from their administrative expenses largely came from a reduced employee size. This is because the key savings that we saw were driven by reduction in salaries across admin staff and across marketing staff. As well as a drop in technical expenses, which was largely due to a clawback of provisioning, given that they missed their Q4 expectations. And all. In their finance charges, they were also quite prudent. We saw finance charges stay below the 2 billion naira mark, even though we had expected it to rise due to rising interest rates. We saw that they haven't even dipped into the debt market, as we had expected, because their cash balance remains significantly strong, one of the strongest right now among their peers. And all this overall led to WAPCO reporting a 13% year-on-year jump in their PAT to about 9.1 billion naira. This is quite impressive for WAPCO. I expect that it will be investors would take this news positively. Thank you.
Thank you, Anita. So next we'll be moving on to fixed income analysis from Omarike. Good morning, Omarike.
Good morning, Chima. Good morning, everybody. I'll start with the money market. The money market opened about 62 billion positive yesterday. After adjusting for repos, the market was about 88 billion negative. An open auction was announced yesterday, where 20 billion was offered across 3 tenors. So despite the outstanding FAR credit, which came into the system yesterday, as well as the FS retail refund, rates traded between 15% to 18% levels. So our expectation for today is that the money market will trade at higher levels because of the anticipated FS retail auction and the long weekend due to the workers' day holiday. So moving on to the FS market, the parallel market remains stable to trade around 485 naira to $1, while the earning window traded at a high of 435.65 naira to $1, closing at 411 naira to $1. So we saw a significant improvement in iron industry turnover yesterday. It closed at $110.46 million, coming from the $33.55 million recorded on Wednesday. Our outlook for the Naira remains the same. It will continue to hover around these levels, barring any major supply of FS to the system. Moving on to the TBs market. The TBs market was awash with activity yesterday. However, a few trades were consummated across the benchmark curve in the NTB spectrum. So funding remains a major problem, though we saw gradual reduction in the wide bid and ask spread. Most of the interest I was seeing yesterday was on the newly issued 1-year paper. Bids on the newly issued 1-year paper was around 9.35% levels, 40 basis points lower than the marginal rate at the last auction. Some trades were done on the 1-year paper at around 9.2% levels. As earlier said, the major highlight of yesterday's trading session was the OMO auction, where the CBN offered 20 billion across 3 tenors. The short end closed at 7%. The subscription on that end was 6 billion. Amount offered was 5 billion, and the total amount allotted was 5 billion. The mid-end closed at 8.5%. The subscription on that end was 6.01 billion, amount offered was 5 billion, and the total amount allotted was 5 billion. For the long end, it closed at 10.10%. The subscription on that end was 35.03 billion, amount offered was 10 billion, and the total amount sold was 10 billion. So our expectation for today is that the T-bills market will trade on a relatively active note as more liquidity creeps into the market. I'll conclude with the bonds market. So in yesterday's bonds trading session, we saw the bearishness that we witnessed on Tuesday, Wednesday intensify as traders traded post NTB auction sentiment of the 1 year closing at about 75 basis points higher at the NTB auction. So the market was quiet and bids remained shy during the course of the day, though we saw few bargain buys across the benchmark curve at around 14.1% levels and above for the long dated papers. We expect the bearish sentiment witnessed in yesterday's trading session to sustain in today's bonds trading session as players continue to trade post NTB auction sentiment. That concludes this for fixed income. Thank you very much.
Thank you very much, Amari. So we'll take another earnings release. So I'll be speaking quickly on Dangote Sugar. So yesterday, Dangote Sugar released its Q1 21 earnings results, and it reported a 41% year-on-year jump in revenue to 67.4 billion. It also reported a 30% year-on-year jump in PAT to 8.3 billion, which is a 26% year-on-year increase from the profits it's recognized in Q1 20. So the significant increase in profits, although we saw some noticeable cost containment across some expense lines, mainly cost of sales, for example, and selling and distribution expenses, the major driver of the PAT growth came from was the significant increase in revenue. So speaking to that, we know that between Q1 20 and Q1 21, there was a significant rise in sugar prices, in refined sugar prices. According to the NSDC, it places that value at about 32% year-on-year increase. And when we look at Dangote Sugar's revenue performance and we account for the increased price, we can see that the price increase was not the only factor that moved revenue. We can see that there was also a jump in volume sold. So we saw that Dangote Sugar's volume increased 8% year-on-year, which we think is quite significant given the competition in the space. So looking forward, we expect that these favorable factors will continue to drive growth in revenue. We think that although we know that the AFCFTA has opened the borders and we may see possible leakages from refined imported sugar, we believe that there are some hindrances to that. One is the ban on FX for importation of refined sugar. And we also know that there is an import duty on refined sugar, and sugar is currently being protected under the AFCFTA due to the National Sugar Master Plan. So we do not see anything that will materially change the direction of Dangote Sugar revenue growth, save for that shouldn't change Dangote Sugar's revenue growth. However, when we look at margins, we can see that Dangote Sugar was able to protect its margins at 27%, leaving it unchanged from a year before. One thing that we think is a significant factor that may suppress margins going forward is the proposed addition of sugar to the list of items that will be banned from accessing FX at the CBN's official window. If that happens, we don't know when or if that will happen eventually. But if that happens, we see we see it affecting its cost of sales because a lot of Dangote Sugar's production is influenced by imported raw sugar. And so we see that affecting their cost of sales significantly. However, given that there's limited foreign supply and the ban on FX would affect all major players, we think that there's a possibility that there would also be a corresponding rise in retail prices of local sugar to mitigate the effect of the rise in cost of sales. So with that, we'll make changes to our forecast for Dangote Sugar and we'll send our report out by the end of the day. Thank you. Next, we'll be hearing from banking analyst, and Joshua will be speaking on Access Bank as well as FCMB.
All right, good morning, Chima, and good morning, everyone. So just to quickly run through Access Bank and FCMB's earnings releases, starting with Access Bank. So the bank reported a very impressive results. The gross earnings were up 6% year on year to about 222 billion. This was mainly as a result of a 9% increase in interest income to about 143.8 billion. The non-interest income was also up slightly by about 1%, but most importantly, they did report a foreign exchange income gain of about 1 billion, as opposed to a 54 billion loss in the same period in 2020. Overall, operating expenses were up by 4% year on year to about 91.5 billion, and provisions came in at 12.5 billion, which is a 47% increase year on year. They reported a profit before tax of 68.3 billion, which is a 47% year on year improvement, and profit after tax of about 60.8 billion. So overall, looking at the results, we see that they bucked the trend that we had seen from other releases with regards to rise in interest income. However, it is important to note that the gains in interest income still follow the trend of being a growth from income in loans and advances rather than being able to bypass the losses or the reduction in income from investment securities. Moving quickly to FCMB, the bank reported a 12% drop in gross earnings to about 43.2 billion. This came as a result of a 14% year-on-year drop in interest income, again, following the trend that we had seen amongst all the other banks that Access Bank was able to issue, basically. Non-interest income was down about 6% year-on-year to about 10.2 billion. And operating expenses were up marginally by about 2% to about 25.4 billion. On a positive note, provisions were down 51% year-on-year to about 1.8 billion. And the bank reported profit before tax of 4.2 billion, which is a 22% reduction year-on-year, and profit after tax of 3.6 billion, which is a 24% decline. So again, like I said, what we have noticed from all the banks that have released so far is that there have been pretty significant declines in interest income across the board, mostly as a result of declines in income from investment securities. And so this has had a detrimental effect on the bottom line. And then in the non-interest income section, although we have seen improvements in fees and commissions across the board as well, the reduction in trading income from fixed income securities mostly and lower FX revaluation gains has meant that some of the banks have recorded declines while others have just remained flat thereabouts. So that will be it for Access and FCMB. Thank you.
Thank you very much, Joshua. So now we'll hear from our media partners at Frontier Africa Reports. Good morning, Temple.
Good morning, Chima. Good morning, listeners. And quickly, we'll look at what's happening in Uganda. Uganda is making efforts to apply for a debt suspension from World Bank and China. As you know, external creditors hold like 2/3 of Uganda's debt, which was up by 35% to some $18 billion as of December 2020. And with what they're doing right now, it's as a result of the fact that they're growing, they're getting closer to default risk, given their fiscal year that is likely to end by June. And of course, we know that the debt load at the moment is gradually exceeding 50%, which is a source of concern actually to that country. And in spite of all of this, they are looking to take a loan of some $2.2 billion again from China. And China has already puts some terms and conditions on ground, asking them to commit repayments with revenues from the sales of their crude oil, something that Uganda is currently not in tune with at the moment. If you look at what's going on in South Africa, you have the producer price index coming in yesterday. It's up at 5.2%, and that's like the highest annual rise since June 2019. Food prices, we understand, the key drivers in their producer price index at the moment, but it's expected to ease or moderate in the next few months, given the fact that we'll be setting into the summer season where you'll be having more crops. In northern part of Africa, Egypt is actually recounting its losses to the pandemic. The minister yesterday, the Minister of Finance, Mohamed Maiti, yesterday mentioned that some $23.5 billion have been lost to the pandemic since it started. He attributed the situation to what your guess is. That's the impact of the lockdown on the industries and the tourism sectors. But they've put some measures together to ensure recovery. They have a financing strategy of some $6.3 billion. And they've also expect that they will be increasing the minimum wage for Egyptians very, very soon. Today, we are tracking the implementation of WTO and Liberia trade facilitation agreements, which is expected to commence today, and we'll be able to give some updates subsequently. Thank you for listening. That's all we have for today.
Thank you very much, Temple. So if we have any question for any of the speakers, if you prefer to speak, you may raise your hand and we will allow you to speak. Also, if you're joining us on Zoom, you can send us your questions using the chat box or the Q&A box. All right, I see that there's no question for us today. We thank everyone for joining us on this session today. We hope that you have a productive day ahead and a wonderful weekend ahead. We hope to see you on Tuesday. Thank you for joining.